Sorry, it took long to open the link. That's because I was looking for the number before I came on air. Then I think was it Rona who was asking? If she's online. Yes, Rona was asking about the CA. The CA is the carrying amount, okay? And the carrying amount, we said we know it from at least our IAS 16 and from before, okay? But right now it really depends because you will have what you call the cost model and the evaluation model. So the carrying amount varies. If you're using the cost model, then we say it is cost minus accumulated depreciation. If it is the evaluation model, then we say it is the valued amount minus accumulated depreciation. Okay, I've forgotten to add minus impairment, accumulated impairment cost or loss, okay, which means the same thing. All right, so so we can continue from where we stopped, right? So this is IAS 36 impairment cost. And I hope this is the question. There's a question here, question 6. Okay, I don't know which year it is. I also just put it randomly. Here is the question, right? So they're saying, compute the impairment loss on the machine to be included in the statement of profit or loss for Agadi Limited on 1st September 2016. Okay, in accordance with IAS 16 property, plant and equipment and IAS 36 impairment of assets. Okay, so before you even read the information, you're supposed to know at least by now that impairment of an asset, impairment loss specifically, is on a condition that the carrying amount is greater than the devaluation or the recoverable amount. Okay, and you should also be knowing that the recoverable amount is the higher of the fair value less cost to sell and the what and the value in use. Okay, so ideally you should be having that information if you're going to attempt the question anyway that has IAS 16 on it. Otherwise you'd be you may not be trading well. Okay, maybe trading on a soft land. All right, so this is the question and we're going to start. Okay, so I know what I'm looking out for and I know what I want, right? So I will read and summarize my question, okay, and later show you the worksheet. So summarize together, okay. So the question is, Agadi Limited that assembles motorcycles in Ndeba purchased a machine on 1st January 2014. Okay, now I remember telling you in the last discussion we had that whichever date they give you, usually it's important in accounting 3. Very important in accounting 3. So always take it seriously. So 1st January 2014, they're saying this is when we acquired the asset. Okay, so it was for 80 million and had a useful life of 10 years. Okay, so cost is 80 million then, and useful life then was 8 years. Okay, actually 10, not 8. Apologies. Okay, and then they're saying it is depreciated on straight line basis. Whenever you see straight line, then life is easy. Okay. Then they're saying that the machine was revalued to 72 million on 31st December 2015. Okay, once you see revaluation, then you know. Okay, this is IAS 16, yes, but once there's revaluation, we know that is what we shall have issues. Okay, not necessarily hard issues, but we know that at the end of the day, we're going to be now carrying our asset at revalued amount minus accumulated depreciation minus accumulated impairment loss. Okay, and also we know that whenever we have revaluation, what comes to our mind is there a gain or a loss on revaluation? Right? So we are good to go here. So the first date that is important is still 31st December 2015. Okay, 31st December 2015, we revalued. So our fair value at that date was 72 million. Okay. right? So then they're saying that there was no change to its useful life at that date. By the way, this part is also important. There was no change to its useful life at that date. Is always an important aspect in IAS 16. Okay, but if they said that there was a change, maybe they gave you a new useful life, then you may want to change the way you are depreciating, okay, going forward. Okay, so since they have said there is no change, so I won't even think about it. Then we go to the next one. They're saying that realized devaluation surplus is not transferred to the retained earnings annually. Okay, so meaning that the realized devaluation surplus, whatever you got as a gain on revaluation, for it to remain in the revaluation surplus or revaluation reserve. Okay, so we shall see how it fills in. Then they're saying on 1st September 2016, okay, another important date. So you come and you say, on 1st September 2016, they're saying that a fire at the factory damaged the machine, leaving it with a lower operating capacity. Okay, so another indicator of impairment is when something gets a damage. Okay, but I thought I told you that you can read through. There are many indicators. I just picked out one. Okay, so this is the other. So clearly, once there's a damage, then once there's an indicator of impairment, then we perform an impairment test. Okay, then they're saying that the accountant has ascertained the following information about the machine at 1st September 2016 when we had a damage. So one is that an equivalent new machine would cost 90 million. An equivalent new machine would cost 90 million. Okay. Then they're saying that the machine could be sold in its current condition for a gross amount of 50 million. Right now, when we sell it off, they'll give us 50 million. Okay. Dismantling costs would amount to 2 million. Okay. Once you dismantle the machine for you to sell it. So this dismantling cost is part of the machine if you want to sell it off. Okay, it's on the same transaction. So meaning that when you receive 50 million, the 2M will reduce the 50 million. You will receive 48 in net. Okay, so that is our fair value. Okay, fair value, let's cost to sell. All right. Then part C, the machine would operate for 3 more years. That gives it a value in use of this is what 60 million. So value in use, they already computed it for you in this case. It is easy. So they gave it to you. All right. So in summary, what I've summarized so far, okay, saying fair value gross, it was 50 million. Then you're saying you deducted 2M. Okay, that's 2M. What you're calling the dismantling. Then value in use is 80 million. Is it 80 or 60? Let me confirm still to be sure. What should we go with? Is it 60 or 80? Okay, I think it is 60. Okay, so I can share now the worksheet. I've transferred the information and we have transferred it together as we are seeing. Okay. Respond some chats. What's the 90? The 90 is in regard to another machine, that if you buy another machine, you would incur the 90 million. You can take you back to that. And then you will tell me, is this information relevant to our question or not? Okay. That an equivalent new machine would cost 90 million. Okay. So ideally, I don't see how this cost is supposed to impact our decisions or our accounting in this case. Okay, because that's what we have, we already have it. Okay, and we're not going to sell it when it's new. We want to sell it when the way it is. If you go to the market, how much are they willing to pay us for that particular asset? Okay, and that information is in part B, which they're saying that the machine could be sold in its current condition. Okay, right now as a damage as it is. For what? For a gross amount of 50 million. Okay. However, the challenge is that there will be dismantling costs. Okay, trying to either remove the scrap bit or something like that, or to sell it off. Okay, so what you receive therefore in full is 50 M, but we are removing it 2 M. Okay, so allow me to take you back to my worksheet so that we start. I already spent some quality time on this, just trying to pull out the information. I think it is this is 80. I also thought so, but having taken a close look, it is actually 60. Okay, so it's a 60. All right, so guys, this is my question. I've extracted my information. So the task at hand for impairment, we say you first determine the carrying amount. Okay, and to emphasize, it is at the date of impairment. Okay, at the date of impairment test. When you're doing the test, supposed to determine the carrying amount and the recoverable amount on the same date. So our task right now is to first determine the carrying amount, what you're calling the CA. What was her name? Rona. She's the one who's asking about that. So this is how we go about the carrying amount, the CA. Okay, carrying. And I'm doing it here so that we see the information that we're using. So carrying amount, we all know that is cost minus accumulated depreciation. Okay, minus any impairment loss if there was before impairment. Loss. So 1st January. So 1st January is the date we have, but remember the impairment. Okay, very sorry about that. I think my network is now starting to misbehave. Okay, so I was still saying that we are going to depreciate. Okay, so but we count now. The issue is we now don't count straight to the impairment date, which is 1st September 2016, because we had the evaluation before. So we first go to the extent of the evaluation, and then we continue till. Okay, so the carrying amount therefore on 31st December 2015, what was it? Okay, so we have we can count. Okay, but we cannot see that these are 2 years. Okay, from 1st January 2014 to 31st December 2014, that's 1 year. Then 31st December 2015, that's another year. So there are 2 years. Okay, therefore, I can first obtain the annual depreciation. And depreciation straight line is, use cost minus useful life. Okay, so the cost was given to us as 80 million. Useful life is given as 10 years. Okay, so giving me 8. Okay, so we have 8 million as our depreciation for the year. Okay, sorry. Okay, then I get now the accumulated depreciation for the 2 years that we have been using the asset. Okay, given by 2 times the annual. And this will give me 16. All right. So therefore, the carrying amount before revaluation on 31st December is the 80 million, which is the cost, minus accumulated depreciation, which is 16. Okay. This will give me, I think it's 64. Okay. So, but we have a revaluation. So I'm doing revaluation. We already discussed revaluation model. So I hope I'm not being fast in any way or making you guys get lost. Okay. So of course, once you do revaluation on 31st December 2015, okay, you're supposed to know your carrying amount and then you know the fair value. So then you compare, therefore, okay, the fair value then becomes the revalued amount. So you compare the revalued amount and the carrying amount on the same date, on the date of revaluation, to obtain a gain or a loss on revaluation. So clearly here we had a carrying amount of 64 and a revalued amount of 72. So clearly there's a gain on revaluation from what we discussed at least. Okay, so I'll say gain on revaluation, therefore. Gain on revaluation, it is equal to the revalued amount. Okay, this is revalued, not the recoverable amount. Let me even put it away before. Revalued amount minus the carrying amount. Okay. So 72 minus 64. Okay, the charts are becoming many. Let me respond to some. Please, I'm seeing over 2 from where? Dear. The 2, I've already counted that those are 2 years. That from 1st January 14, patients. From 1st January 2014.
Excuse me,
Yes. Okay. I was responding to patients. Kindly chat, right? Because I was responding to someone. Whoever was asking the question, you can ask again, but preferably chat. Okay, because when you unmute now, you interfere everything. Kindly chat. Patients, you're asking the two. We are saying that when you count from 1st January, the day you purchased it, till the day of revaluation, which is 31st December 2015, there are 2 years. Okay, that from 1st January to 31st December, the same year, it's 1 year. Then from 31st December the previous year to 31st December this year, which is 2015, makes it 2 years. Okay, so therefore we're estimating for 2 years. So the 2 times 8, 16. I hope I've answered you in that regard. Then the other charts, I didn't read them. The network went off. Okay, let me see if they're still there. Okay, seem to be there. Okay, what is